Yeah, I would say there's two main issues. The first one is that there is this conflation between Bitcoin and crypto, and
Okay.
it's very different. So I've kind of touched on this as we talked, but crypto, for the most part, is centralized. It's companies basically masquerading as decentralized networks. They're all companies. There's people there. They're running the companies. They have investors. They have VCs. So that is not Bitcoin. Bitcoin was released. These things are launched. Bitcoin was published as a white paper. Software was released. It grew organically. Nobody controls it. These things are all controlled. But in the eyes of many politicians and governments, they're still far behind from where we are, and maybe your audience too. But they don't understand that these are different. So in fact, if you remember when FTX collapsed, a lot of the conflation was like, oh yeah, Bitcoin FTX collapsed, right? Bitcoin price was impacted by the FTX collapse, but there's no connection between it other than Sam Bankman-Fried sold Bitcoin that belonged to his customers and drove the price down. But a lot of people still think it's the same thing. It's Bitcoin and crypto. And it's a disservice done by a lot of people in the space, like Coinbase CEO Brian Armstrong. He loves using those terms interchangeably. But for Bitcoiners, we always try to be clear. There's Bitcoin and there's everything else. So that is one bottleneck, I think. The second bottleneck is just the concept of risk. So people still believe Bitcoin is risky. And that is just a preconception I think they have yet to work around. If you look at a lot of the stocks, they're very volatile, but like countries, pension funds, institutions still invest in stocks, but they are very volatile. If you compare Bitcoin to some of the NASDAQ stocks, it's actually more stable. So there's just this preconception Bitcoin is volatile. But I don't think they understand that the volatility is really to the upside. If you zoom right out, Bitcoin is just a continuous green candle up for 14 years. So it is volatile, but it is trending upwards and very consistently. But I think generally people just have to understand that risk is not what you think it is. And we've seen this because I've talked to some pension fund managers, and the initial reaction is, well, yeah, we don't touch Bitcoin because it's a high risk asset. But then they're not really thinking about what risk is. They're not analyzing. And if you're not analyzing, you're basically doing zero risk assessment, because the whole point of doing risk assessment is looking at things on a daily basis, at least, and seeing what is risky. And Bitcoin is definitely not risky at this point. We have 10 ETFs that are filed. We have countries adopting Bitcoin. And we see massive demand on Bitcoin buy side, as well as hash rate going through the roof, which means mining companies are investing heavily in Bitcoin. So sometimes you can't really help people because they just have it set in their minds that Bitcoin is risky. But if you are doing due diligence and you're worth your salt as a risk analyst, you should understand that Bitcoin is not risky at all.
Okay. I guess, sorry, one more question just related to what you're saying there. Is there any issue that you foresee, whether someone like explicitly verbalized this or just in terms of what you think? I could imagine one stumbling block to is certainly the larger governments going all in on this is that, there's a sense that there's a reason that a lot of libertarian types like Bitcoin is because it, as you said earlier, like it limits the ability. Governments can't debase it the way that they use with their own fiat currencies. And so is that a reason too that a lot of powerful governments at some level are going to say, well, no, we don't, Samson, we don't want to listen to your advice because that limits our ability to inflate?
Yeah, that's one element of it, but I think there's more than just that. The other element is, I would say a lot of people have just forgotten what money is. They think they know what money is. They think it's dollars at the central bank, but it's not money. That is just a poor form of a derivative of money. But they've gotten entrenched in the position that they have to defend that. But actually, the more they try to defend it, the worse it becomes, because they've turned money into a surveillance mechanism. Right? This is why we see things like CBDCs rolling out, because they think that they can protect borders, protect people by surveilling people. And nobody wants to be surveilled. Money is simply a transport mechanism for value, right? It is human time and energy. It's a ledger that doesn't really exist anywhere. This is why Bitcoin is so perfectly aligned with the fundamentals of money, because Bitcoin also doesn't exist anywhere. It's just out there, and people run the software to access it, much like money, right? There is no such thing as money. I make something of value, I sell it to you. There's economic value there, right? We might have traded, but money doesn't actually exist anywhere. So I think the challenge is they've tried to take money and make it a thing, but you're trying to bind something that does not exist into something that is physical and can be corrupted and manipulated, like, for example, gold. So understanding of money is one blocker. But yeah, the other thing is just they do want to control money, right? Because they've gotten used to it. So they don't necessarily like the idea of not being able to control money. But I would say overall, it's a mix of these things: not understanding money, wanting to control money, and just being risk averse on what they think is risky.
Hey everybody, this is Bob Murphy. Thanks for listening to this clip from the Infi podcast. If you like what you heard and want to hear more, please consider subscribing and share this video with others. We've got new episodes dropping every Friday with more insightful discussions. Stay tuned.